Hey traders, welcome to this week's Staying Sharp with COT Data Insight. I'm Filmovs, and in this video, I'll break down the key market setups I'm watching based on CFTC data, positioning data, macro catalyst, price action. If you follow my newsletter, this will bring it all together visually. Let's get into it. So we've got futures expiry, we've got the BOJ decision, we've got FOMC, and a lot of other noise that has to do with the geopolitical tension between Iran and Israel. However, I'll be approaching this week with what I've coined the third week protocol. This has to do with my observation as how price can be volatile in this week, and if caught on the wrong side, could be a painful experience unless you align with the most probable time, which over time, in my observation, has been the close of the Wednesday. Sometimes this aligns with FOMC. However, I say the best price action on the Thursday and on the Friday. Okay, so we will start as usual with NQ. And for NQ this week, what we saw from the COT data release from the 10th of June, there are no major changes in the COT data. And if we recall from last week, the idea was to go into the week and only focus on the intraday news without any swing bias as to being long or being short. And in the indices market, they were really disappointing reaction as to the CPI release and the PPI release. The best place to have placed that was the currency markets, and UJ was the peak for such kind of play. And as we can see on the chart here, how Monday was a small range day. Tuesday made the EEC higher. Wednesday, which was CPI, for me, it was a news failure because we were expecting as the CPI numbers were lower, shouldn't that have triggered higher prices? Well, it didn't. And again, we couldn't foretell having any swing bias into the whole thing. I just preferred having reaction to the news. If there's any follow through, you react to that. If not, you stay out. The PPI data too came out, and again, nothing interesting in terms of reaction. However, if we look at what happened in the UJ upon the release of the CPI news, it was obviously bearish for the dollar. So the path of direction was clear, and the following day during the PPI news as well. Again, if the numbers were negative, the dollar, it's a reasonable thing to just see a weaker dollar. However, the news release was here again, a retrace higher and then a continuation lower. Um, so as regarding the CPI and the PPI news, nothing really spectacular in my own opinion for me to take note of. However, we did have this massive dump in Asia on Friday, and this had to do with Iran and Israel, and no surprise in the market reaction. And we had an interesting New York. I wasn't in the market throughout all of this actually, um, but yeah. So that was what happened on Friday and also for the week generally. I wouldn't say there was any swing idea I would have confidently put in the market to take any direction rather than react to the intraday price action. And I put out my Substack already for this week on my thoughts and everything. There's no change in the sentiment regarding the indices. The only thing I was able to highlight was the fact that we have this redness in both the long and the short of the non-commercials, and this typically tells me that they are overstretched, but on both sides. So again, I will just brush that off as hedging activity by the speculators. However, my interest now has shifted to what are the commercials doing, and if you compare negative 12,000, negative 9,000, negative 10,000 to what was the position net positioning size back in March and February, you will see negative 40,000, negative 46,000. So it's a it's way more bullish, and you can see that even from the long and the short side. So again, there's no discernible direction that I can say, okay, for sure we're going long or we're going short. I'd love to see one more thing. I would love to see the contract expiry, which is scheduled for tomorrow being Monday. I'd love to see the FOMC decision too as well. And for ES has been a very interesting thing that last week I had to make a note on it, and this week again did not disappoint because we saw an increase in 61,000 contract size, and now again we are seeing another increase to what's it called, to 58,000. So they are maintaining that bullish commitment, in my own opinion, and I would love to see how this would engineer a slow grind higher. Let's see if I can get the charts for ES. Yeah, so on the weekly is the most interesting thing here. How do we think price will just continue grinding higher slowly from here? Again, um, this week we are going into the third week, so I'm only interested in any swing point or clean trade from Wednesday close, which is going to be after the FOMC decision. We will see how the market reacts towards the close of that day. So nothing for me to act upon, just me going through my thoughts, going through my plan as to how to be positioned and how to react should any new information be gotten. Next also has to be in the euro. What did we see in euro last week? We had very fantastic reaction in the currencies to the catalyst, which is CPI and PPI. I highlighted also too that last week, even though I'm overall bearish on the euro based off of the position of the commercials, I have to respect the CPI data and the PPI data, which came out negative the dollar, and of course made sense that the euro reacted the way it did. And that is not the interesting thing. The interesting thing has been the key levels I noted on the daily, which I said I wanted to see how price breached them. And as you can see, all the levels I wanted breached has been breached, even on the weekly time frame. The consequent encroachment and even the high, all-time high too, has been taken off the 21st of February. We saw the same phenomenon in DXY too as well. So from here onwards, my interest now is to see, is the exhaustion in, is the high for the month in, and do we roll over from here? The contract expiry we were looking for has happened on Friday, so now we're looking for clues to tell us that we are going lower on the euro, which would only become interesting anything from Tuesday close. But then we have an interesting news coming out with the FOMC. You have to wait for that to as well to print in and see the market reaction to that as well. So that's it for the euro. Nothing spectacular. I don't even need to go down to the lower time frame because it's simply a reaction to the news that came out. So let's take a look at it. On Monday, on Tuesday, again, nothing interesting for me here. Tuesday close came over. You had to wait for the news release. The news release came out. If you were long based off of the news, again, that is to say you're assuming you don't want to enter on the news release. So from here, it was a good long opportunity. Even into the weekend PPI result on Thursday, it was just a fantastic trade going higher without any concern. Next also is going to be for the UJ, which is just the opposite of what we saw in the euro. Okay, paper stone. So again, the same theory. I don't even need to go talk too much about it. At the moment the PPI numbers came out bearish for the UJ, all you had to do was to look for opportunities to short. And from 10 a.m. it was the perfect time to have been in on this for shorts, which fantastically dropped throughout, even into the Asia, and that was the trade. Like, literally, that was the trade. Um, so for this new week again, it follows the same idea that I would want to see how market react to the FOMC decision, and that would suggest the next moving line. Oil is the talk of the week, which has to do with the explosive reaction. Last week I made mention about this STD range, which was me projecting the range between this high, this low of this range here, one standard deviation, and lo and behold, we went as high as 3 standard deviation. And for me, that's phenomenal, right? It's a fantastic reaction as far as I'm concerned, and I'm pretty much excited about how it all played out. And I would have no interest in this anymore until further notice. Most likely, the next contract expiry, which is going to be somewhere around 18th of July. So I think it be more clearer until the next contract expiry. And what else again? Yeah, I believe that's literally it. I'm just looking at NQ, I'm looking at the EU, I'm looking at UG. Those are the trades that looks cleanest to me and are backed by COT. Um, Other than that, I would want to just stay on the sideline and not get distracted with the noise back and forth. Now that's it for this week. COT Outlook. If you found this helpful, like and subscribe. Drop a comment if you're watching any of this setup too. And if you want to deep dive, the full write up is in my Substack. Link in the description. Stay nimble, stay sharp, and see you next week.